All right. So, all right, let's talk about the market first, okay? Not a big fan about talking about the indices, but let's talk about them. Let's just go with the SPY, okay? The SPY has been pretty much in an uptrend for a while. The 21-day moving average, which is this yellow line over here, has been somewhat of support. Once it breaks that, it finds the 50. This past week, we broke the 21-day and the 50. And the funny part about all this is that if you look at these dates, they all pretty much coincide, where the market kind of like drops down to the 50, and on the 18th to 19th of every single month, it bounces. For here, 519, there is the bounce. Right over here, 618, right over here, 719, right over here, 819, and here it's 917. So maybe it bounces this week, but I figured that was kind of funny that that for some reason or another, the market is bouncing pretty much like clockwork on the 18th to 19th. But we broke the 21-day moving average and we broke the 50-day moving average. And with the QQQs, it's a very similar situation where, again, the 21 EMA has been significant for the QQQ as well, although it hasn't touched the 50-day as many times as the S&P has. So the S&P and the Qs have been in a very strong uptrend. The IWM, on the other hand, that's a different story. This thing has been trading sideways for roughly about 7 months, okay? And coincidentally, the market of stocks peaked right alongside the IWM. The IWO, Russell 3000, Russell 2000 growth stocks, the same exact thing. Peaked in February. That's when we had everyone talking about stocks, everyone talking about Bitcoin, and all you have to do is go on YouTube and punch in the best penny stocks to buy for the next week, and boom, you double your money. Okay, that's exactly when the market of stocks peaked. And if you look at other, the DIA, the Dow Jones, very similar situation. It's been going sideways since May for about 4 months. You take a look at ARK. Again, same thing, sideways for about 6 months, 6 to 7 months as well. And at the beginning of the year, that first month was a great month for individual stocks. And then once January was over, I remember like it was yesterday, February 8th, February 9th, that's exactly when stocks peaked. And ever since then, individual stocks, let me rephrase that, individual stocks. And ever since then, we had these small pockets of opportunities. I mean, small. A week to 2 weeks where we get the momentum back, and then it just fades immediately. And the problem is that once you go into a trading slump, what you should do is very simply is bring down your size, right? And what's going on with the market is that you bring down your size, and then once things are starting to look up again, you start to increase your size, and it's just simply too late. By that time, the market of stocks has already peaked, okay? So, as always, if you have any questions, put them on the chat. The more, the better, the more informative this conversation will go if you ask questions. So now, since the market has peaked, let me rephrase that. Since the market of stocks peaked back in February, and you see the IWM trading sideways for 7 months, you see the IWO trading sideways, ARK, ARKK. Let's look at 50, the IBD 50. Last couple of weeks had a nice run. So with that being said, what we have is we have quite a few stocks that are forming bases. A basis very simply is when you have a stock that's been trading sideways for 4 to 5 months at a minimum, 6 months, the longer, the better. And very simply, what happens is that it gets to a level where, the buyers and sellers find equilibrium. They're going back and forth, back and forth, back and forth. And suddenly at the end, what you see is that the volume starts to dry up. You typically see a pattern of higher lows and higher highs, which means that the supply is being eaten up by the demand, and or the sellers are running out of supply. So because the market has been trading sideways, we have quite a few stocks that have formed bases, and they've been trading sideways for a while. And I believe those are the stocks you want to keep an eye on for the next 2 to 3 months, because again, the longer the base, the higher into space it goes, the longer the base, the prolonged the move is. If you see a stock has been basing for 6 to 8 months, rest assured that it's probably going to trend for at least 4 months to the upside. Okay. So that gives you a good opportunity to get involved into something with a wide stop. And it gives you a good chance of staying in the trade for a while for a very good return. So you can call this a base. Some people call it phase one. It could be a stage one. It could be a stage four, or it could be, some people call it the Darvis box from, the trader Darvis, that what he looked for were for stocks that were trading sideways in the box, and then he bought the breakout and put a stop below the breakout. So basis, right? They could be stage one, which means to me, a stage one, I like basis for the most part, from stocks that are trading near 52-week lows. Okay. I like those. A stock that's trading near a 52-week high, that's going through a long base, it can be accumulation, or it can be the fact that they're distributing the stock. Sellers are selling slowly but surely. That could be a stage four, right? But normally, if a stock is trading near a 52-week low, or the stock has been in a tremendous downtrend, down whatever it is, 40, 50%, then it's trade sideways for 6 to 8 months or 4 to 8 months, then that chances are that stock is going to break out to the upside. So what I'm going to do today is I'm going to go through some basis, okay, and give you some examples. So here's ARK. This one just broke out recently. You can see here trading sideways for about 6 months. It had a breakout, had a retest, and that retest was bought up immediately. And then just in the last couple of days, it had 2 big up days on heavy volume. These purple bars is when the stock trades up at least 4% and 3 times the average 20-day volume. Okay. So this one here, for me at this level, it's not buyable, but at some point it's going to settle down a little bit, tighten up, and then you're going to want to get involved. But this is just the beginning of a move, in my opinion. And I think this stock is fine as long as it stays above 250. OCUP, this is one that I own, trading near a 52-week low. The stock's been trading sideways for 5 months. I'm long at 495 with a stop at 440. Here's a situation where it's near a 52-week low. These are the ones that I like. Okay, the stock is already beaten up. Here, the buyers and sellers, they find equilibrium. They're buying, they're selling, buying and selling. Here at the very end, the stock starts to tighten up. The buyers are no longer waiting for the stock to get to the bottom of the base. They're sucking it up even higher and higher and higher, and then you get the breakout. PLTR, Palantir. Here's a stock. Here, as you can see a little bit better, trading sideways for about 6 months. Here's the top of the base. Here's the bottom. And again, you see here how it tested here, tested here, tested here, and then suddenly here, they're no longer waiting for, just give me a second here. They're no longer waiting for the bottom of this chart, for the bottom of this box to buy the stock. Okay. This is one I put on Twitter. I bought the other day at 914. At 26.35, I already sold some plus 5%, 7.5%, 10%. I'm going to leave a piece on with a very wide stop, at least giving it, using the 21 EMA as a stop for most of it. But you can see the volume here. But again, trading sideways for 6.7 months. Sideways action, you get that big breakout on heavy volume, 2 days of pretty much a pretty heavy volume. Okay, I sold some on the way up. I'm going to leave a piece on. I'm going to write it up. You can write it up with, again, you can use a trailer, a good till cancel trailer of 10 to 15%. And my suggestion very simply is that once you put that trailer on, that follows the stock higher. So as the stock starts to move higher, the stop starts to go up along with the stock. My suggestion is that you take it off your screens. Just take it off your screens. Don't even look at it and let it do what it has to do. And hopefully that 15 to 20% stop loss is wide enough to keep you in the trade for at least a 40 to 50% return on whatever piece you have left. Since I like to sell on the way up, I'm always going to take some risk off the table as the stock starts to move higher. And that's going to make it a little bit more comfortable for you to hold on to that last piece. Again, VCYT is a biotech stock, again, trading sideways for roughly, 6 months. And here you go again, up, down, up, down. Here is this little significant low, in my opinion. If you were to buy this stock here, you're going to have to use this as a stop level 44.75. But again, this is a stock that's down from 80 down to $30 a share. And again, there's a lot of people who don't like buying stocks near 52-week lows. They continue to say there's resistance on the way up. That could be the case. That's probably not the case because, again, if a stock goes from 90 to 40, a lot of people sold that stock, okay? So sometimes it does offer resistance, but if you look at the best performing stocks year to date, let's take a quick look at that. Let's just take, what is this? VCYT, all right? Let's just talk about resistance, how people don't like to buy 52-week lows because on the way up, there's resistance. Let's just take a look at the stocks that are trading near the best performing stocks year to date. G-Port, whatever. But, look at this stock, DXLG. This stock was trading near lows. Where is the resistance on the way up? I'm not saying that it doesn't exist, but I think people make too much of it, okay? You take a look at AMC, right? This stock started from a 52-week low. Where is the resistance on the way up? LWLG, let's go to a weekly chart. This is an IPO, but look, it's done nothing. Where's the resistance on the way up? GameStop, same thing, started from a 52-week low. Where is the resistance on the way up? VTNR, started from a 52-week low. Look, down from 10 down to $1 a share. Where's the resistance on the way up? It's a moonshot. PMTS, where'd it come from? 52-week low, 1 for 5 reverse split. Shoots from $5 to $20 in a straight line. Where is the resistance on the way up? So, we read all these books written in 1960, 1970, but I think I always believe that the best book that you can ever read about the market is by studying the year-to-day winners. That's all you need to do. All right, let's go back to these spaces. VCYT, again, trading sideways for whatever it is, 6 months. Biotech stock, a little bit more dicey, just because they might come out with some FDA news. OPRX, I own this stock, bought it at 916, 68.15. Again, very simply, here's a stock trading sideways for roughly 6 months, trading near the high. So you can always make the argument that the stock is trading near highs, that this can be a stage 1 or it can be a stage 4. Right, we can break out to the upside, but and then this would be called an accumulation phase. But if it breaks out to the downside, you can call this they were distributing the stock. But either way, here's a perfect example where the stock is going up and down, up and down. Then suddenly at the very end, you get a pattern of lower highs, of higher lows and higher highs, and then you get the breakout. Right. Travel Centers is one of my favorite stocks of all time. I don't own this stock, but again, trading sideways for a while. And it broke out. It's got to set up again. And if you look at some of the major winners, whether it's Shopify a few years ago, sideways at the 40 level for 6 to 8 months. I think CRWD did the same thing near the bottom of the base. So did DocuSign, I believe. So I think bases are important. Open. Again, here's another one that's trading from 40 down to 15. The stock's been trading sideways for roughly, 5 months, and it's still trading sideways, but I want to have it here. And I want to make sure that I'm on top of it, because again, once they break from these bases, you normally have a prolonged move higher. And I show some of those things on Twitter this week. Let me see if I can bring it up here. Let's see if I can bring it up here. If you have any questions, I see one on the chat. I'm going to answer it pretty soon. Right. So if you look at here, LPI, basing for 9 months, reverse split near a 52-week low. At the very end of before it breaks out, it tightens up, and the stock goes from 20 to 40 in a straight line. I think the stock hit 100. Okay. It had some 20% drawdowns, and that's the reason why I like to sell on the way up and leave a last piece with a pretty much wide stop. But here's the point, that it went sideways for 9 months. Whether this company had earnings or not is pretty much irrelevant. It was under accumulation, near a 52-week low. There's no reason, absolutely no reason, to allow this stock to go back to a 52-week high and say, okay, I'm going to buy it now because I got clear, skies ahead. That makes 0 sense whatsoever. Here's AMPY, another stock sideways for 11 months. What happens at the very end? It tightens up. What do you have here? A pattern of higher lows. American Airlines, same exact thing, falls apart from $30 to $10 a share. Back and forth, back and forth. And again, people talk about resistance, but it goes from 15 to 25. I think it went to 30 in a straight line. Okay. Look, people sold here. Okay. And then here you have buyers that found value, and they're sucking up that supply. The sellers, they start to run out of shares to sell. And even though you're at a 52-week low, chances are that those people are washed away, and you got a brand new set of buyers in there. Okay. And those are the guys that are forming the base and breaking out the stocks. All right. So that's that. Let's continue here. LRN, again, I bought the stock last week, 9.15, sideways for 11.5 months. I'm long the stock at 34.90, stop loss at $33 a share. Here's Wayfair, still trading sideways. This could easily be a stage 4. So if you're into shorting, you keep track of this stock, and this could be a short, right? Or it could be a long. But right now it's trading underneath the 200-day moving average. You don't have a pattern of higher lows. What you have is a pattern of lower highs. High here, lower, 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 and possibly lower. So this can be a short. All right, would you trade these big bases as weekly setups? If so, would you hold it through earnings? Yeah, you can trade it however you want. The time, whether it's weekly or daily, that's pretty much irrelevant, right? Would you hold through earnings? I like to sell on the way up. So whatever it is I'm going to hold through earnings is going to be a very small piece after I already took some off the table. Okay. So if I own 1,000 shares, I'm going to sell 750 shares on the way up. I'm going to keep that 250 with a wide stop. Wide enough that, and also at a minimum, that it covers my my break-even price. I'll give you a perfect example. I just sold MTTR, the last piece, and I bought this stock at 1661. I sold the last piece on Friday, but that last piece, it had a 15% stop. I just wasn't crazy about the market. I'm going through the charts. I came across it, and I got a little itchy in the trigger finger, and I sold it, but it was a 40% profit at the very last piece. So if you're going to hold through earnings, sell some on the way up. Okay. Let's see what we have here. Can you check NNMD? Okay, NNMD. No, I know what you're talking about. That's that little ARC stock. That's not the symbol though. Give me the symbol again. I forget, what is it? NNDM. NNDM. You're probably talking about this one, NNDM, which is, I think, the drones, I believe. Again, look, $9 a share. you can call that, it's basing, right? It needs more time. Obviously, you want to buy somewhere near the breakout. All right, let's go Wayfair. Again, this could be possibly be a short if you're into shorting. PagerDuty, sideways for 6 months. I'm long the stock at 44.33. I already sold some on the way up. My stop loss is now going to be probably over here, 42.49. This stock broke out of this base on earnings. On that earnings day, the stock was up 4% or more on 3 times the average 20-day volume. It retraced, bounced off the 20. And now we just have to wait and see if it holds the top of the box. But here again, stock goes down from 60 down to $35 a share, almost 50%. It goes up and down, up and down, up and down. And then you start seeing here at the very end, a pattern of lower highs. 1, 2, 3, 4, and this is probably 5 right over here. So I'm going to sell some on the way up, and I'm going to keep some of the trailer that trails the stock higher. Thoughts on LIT if it's a good entry? Right. I don't know. I mean, that's so if it's at a good entry, that depends on your time frame. That depends on your time frame. All right. The longer your time frame, the least that entry matters. If you have a long-term time frame, then entries become less relevant. If you have a short-term time frame and you are a short-term swing trader where your average holding period is 0 to 10 days or 21 days, then that entry matters a little bit more. If your average holding period is 6 months to 12 months, then the entry doesn't matter as much. So it depends on, I mean, this is a stock, this is an ETF. It gaps up and down a lot. So is it a good entry? I mean, again, it depends on your time frame. Let's see what else we have here. PD, GCI. Bought this one 661. So some already up 7.5%, basing for 6 months. Here's a pattern of higher lows. 1, 2, 3. Stock traded between roughly $4.50 to $6 a share. If you're into that, that Darvis math, you take the bottom of the base $4 plus the top $6, you get a target of $8 a share. Okay, so if I'm long the stock at 661, stop at 590, I'm risking 71 cents to make possibly whatever. I mean, whatever it is, $1 and change. CLPT, another stock, again, creating a base. GDRX, another stock. It needs to set up a little bit better for me. TSEM, trading sideways for 6 months. I'm long the stock at 30.64. Up, down, up, down. Excuse me. And then you get the higher lows. On this breakout right over here, 4% on 3 times the average daily volume. LABU, again, is forming the base. You have to look at XBI for this. But here it is. Sideways down, peak along with most individual stocks. And it's been trading sideways for months. I'm long. I went long in 917 and 131.25. My stop right now is roughly about 128. NTRA sideways for 9 months, right? If you want to go long the stock, you can go long right over here. Stop, your initial stop goes right over here at 115. Snap is another one. I tried these a few times already. There's certain times that I buy certain stocks, and they just trade very sloppy. I just put them on my do not trade list. Snap is one of them right now in the short term. FUBO, again, I'm just tracking these things, trading sideways. We'll see what happens. ACTG, one that's been trading sideways for 6 months. As you can see here, it's starting to tighten up here at the very top of the box. SSYS, trading sideways for 6 months. Stock goes from roughly 20 to 55, falls apart. Right here, the buyers and sellers are back and forth, back and forth, back and forth, back and forth. Let's see, we have a pattern of higher lows. If you want to go long the stock and cheat a little bit, and your stop's going to have to be, your stop will have to be right over here, $22, $21.90. Does Amazon look good for a short entry? I'm long Amazon. So Amazon's been trading sideways for 1.2 years, whatever that is, 14 months. Okay. It had a big move here from 3,200 to 3,500. It's pulled back a little. The 21-day moving average right now, it's probably going to act as support. I'm on the stock at 34.86. My initial stop was 3,400. I'm probably going to play it tighter and use the 21 EMA as my stop. If you wanted to go short this stock, right? So this stock is trading, it's been going sideways for 1.2 years at the top of the range after a tremendous move from 1,600 to roughly 3,400, right? Almost pretty much a double, right? So you can call this, it could be accumulation, or they can just be selling the shares slowly but surely, right? Not rocking the boat, but just slowly but surely sprinkling some shares here and there. And this can be a stage 4. It could be a stage 1. It could be a stage 4. If you think it's a short, then I will probably use a break of the 21 EMA to initiate a short position with a stop somewhere above 3,500. SQ going sideways for 6.4 months. Again, this is going sideways for that long after a tremendous move higher from 50 up to 250. This could be a stage 4. So if you're into shorting, this could be a stock that you can maybe try as a short, with the assumption that maybe it's that the institutions are under, have this stock under distribution by selling slowly but surely, right? PACB, another stock, down quite a bit, sideways, again, on my list. We'll see how this plays out. ARC, same thing, basing, it's trying. ZEV near 52-week lows. These are the ones that I like, the ones near 52-week lows, because you have to assume that the sellers are out of the way. Okay, stock goes from 17 down to $6 a share. They're probably out of the way. You get a brand new set of buyers. I'm long this stock at 926. My initial stop is right over here at 870. ARKG, same thing, just going sideways. MYGN sideways for 5 months. This stock broke out, went up a little, retested. I went long in 917 at 33.18. My stop is right over here at 31.25. That is my initial stop. But again, sideways for roughly 5 months. And then you see here at the very end, a pattern of higher lows. FIVN, this could be also just like SQ and Wayfair. It can be a stage 4. Stock goes from 40 up to roughly $200 a share. And now it's just been trading sideways. We had a gap down here. We had a bounce. This is probably a short if you're into shorting. BXRT, 1.1 years of sideways action. As you can see here, it's setting up. This was one of those COVID plays that was really hot a year ago. So the point is to keep these stocks on your radar, and because again, if the market's been going sideways, the market of stocks has been going sideways for the last 7 months. And that's the reason why we're seeing so many stocks that have been trading sideways. I mean, I have 81 on my list as of today. So if the market, for some reason decides to break to the upside, chances are that these are going to be some of the biggest winners. What do you look for in volume? Sometimes I see volume coming in, but price doesn't move. I'm not a big fan of volume. I don't think, I'm not a big fan. Listen, a break to me, when I'm looking to buy a stock, I'm not looking for volume confirmation. Okay. I do have one of my favorite scans is a scan that looks for stocks that are up 4% or more on 3 times the volume. That's one day, right? That is one day. I'm not buying the stock on that one day. I'm waiting for it to set up 10 to 15 days later. So I am not a big fan of volume where, oh, the stock is going up, but the volume is whatever it is, 10% below the 20-day average. To me, that means nothing at all. And if you study stocks, again, if you buy a stock that goes from 10 to 20, and that move from 10 to 20, which you'll see often, didn't come on increased volume, that percentage gain is the same. It's not like, hey, it's 100%, but you're only going to get 80% because the volume was below average. So, volume, whatever. It's not something that I look for, for confirmation. MOV, trading sideways for 4.5 months. I went long the stock at 32.33. Stop comes right over here at $31 a share. Do you have a method to accumulate index ETF during intra-year corrections applied to other ETF? Right. So the question is, do I accumulate index ETF during? Right. So as you know, if you are in the room, which I believe you are, I'm a firm believer in owning the index ETFs as core holdings. That's the SPY, the Qs, the IWM, because you're going to, number one, the indices have a tendency to move higher over time, where most individual stocks, they're going to have their day in the sun, and then they're going to, go out of business, they're going to go down, whatever the case may be. But the indices, since they're always changing stocks, it has a tendency to move higher. And if you own the SPY and the QQQs, you're pretty much guaranteed to own every single biggest long-term winner, not short-term winner, long-term winner. Amazon, Apple, Cisco, those stocks, okay? So can you do the same with ARK? Yes, we did it with ARK. When was it? Here, 3.5 long, 112.12, down 4 days in a row, down 30% from the 52-week high in 14 days. The only difference is that when you're doing it with some of these ETFs like an ARK, which they're fairly concentrated, then sometimes 15%, the average intra-year decline for the S&P 500 is roughly 14 to 15%. So when you're doing it with the ARK or with FFTY, it's going to be a little bit higher than 15%, but you can do it, right? We did it with IWO just the other day, long 820 at 284, down 16% from the 52-week high. Where was 820? Right over here, down 1, 2, 3, 4, 5 days in a row. This is when breadth was horrible. Okay, even breadth now is just horrible, but on this day it was extremely just bad. So much that I was writing about it on Twitter, and people read stuff on Twitter and they're like, oh, he's writing about negative divergences and bad breadth, that means he's short. And here I am buying this because the breadth is so bad that it's only going to get better. And this thing was down 16% from a 52-week high. So you can do it with other ETFs. But if you're doing it with something like ARK, then sometimes 15% is not enough. They're going to go down a little bit more. If you're doing it with something, you're talking about KWEB. Again, this is a China ETF. You can do it with this one as well, but this is not the S&P 500, right? This is a sector. Sometimes sectors stay out of favor for a while, right? Happened with XLE, which is the energy one, and it happened with a few others. So with the energy ones and those type of sectors, you can go to my blog, fzorrilla.com, and on the search box, write down 3 years in a row. So usually when an index or an ETF or a sector ETF is down for 3 years in a row, those are normally the ones that perform the best the next year. Okay. And I'm going to show you that right now. Let's punch up XLE. Okay, XLE here. There was a time where it was down, XOP actually. XOP, right? So here it was down for 4 years in a row. 1, 2, 3, 4. This year, it was pretty much the best performing ETF. XES, here, 1, 2, 3. So typically ETFs that are down 3 years in a row, it's extremely rare, but normally those are the best ones to pick when it comes to the SPY, QQQs, and IWM. For me, I want to get involved when those things are down at those intra-year levels, 14 to 15%. There's always a reason why. We don't know beforehand what that reason is going to be. It's always really scary to buy at that time. So you want to leg in slowly but surely. But if you look at the market over time, you just take a look at the market over time and just ask yourself by looking at a weekly chart, do you want to buy after a huge move like this when people are saying, oh, we had a 52-week high and there's no resistance up above, it's a clear sky, and look what happens, right? Or you want to take advantage for the long term and buy blood. And I only recommend that for the index ETFs, not individual stocks, okay? Okay. So look, I'm going to put this this list, a link to this list on the description below, so that way you can keep track of this. But again, these are the same setup. This is D-Dog, sideways for a while, then finally broke out. This could be the beginning, just getting started. All right, this thing was going sideways for roughly 1 year. All right, but if you get involved here at 143, you got to give it a wide stop. Okay, or you can just wait for it to tighten up a little bit more and then go long. Right, and as far as breadth is concerned, it's been horrible. Horrible. I don't remember seeing breadth this bad for this long ever. All right, and I started in 1997. It's just plain, it's just horrible. If you look here, right, the SPY's trading at a very near a 52-week high, right? But yet stocks up 25% or more in the quarter has been declining for months. Right now, with the market trading near highs, we have 896 stocks up 25% or more for the quarter versus 971 stocks that are down 25% or more for the quarter. And this has been the case for the last 6 months, where the S&P continues to grind higher. But underneath the surface, stocks are just not participating. If you take a look at stocks above their 40-day moving average, it's only 39%. And it's been declining, for the last 8 to 9 months. So breadth has been horrible. Tom McClellan said it best the other day. He said very simply, he said that, negative divergence, bad breadth is a condition, not a signal. Years ago, many years ago, I think before 2015, when you saw such negative breadth when the market had highs, you can rest assured that the market was going, the indices were going to catch up on the way down. That just hasn't been the case lately. It just hasn't. C2, 80% upside days, that will screw a lot of bears as well mentally. Yeah, whatever. Again, what matters to me, right? It could be different for somebody else. What matters to me is how individual stocks are trading. That's what I trade, individual stocks. And there's certain times where the SPY is doing incredibly well, but most stocks are not doing well, right? If you own the SPY and nothing else, then you got nothing to worry about, right? It's fine. But lately, if you own any individual stocks, what ends up happening is that on these pullbacks, you're getting crushed if you don't have stops. And then on the way up, you're not participating. So you're guaranteed to participate on the way down, right, with your individual stocks. But on the way up, you're not participating. That's been the problem lately. And we get these small pockets. May, small pocket, 1 to 2 weeks. And then at the end of August, we had the small pocket of opportunity where things really clicked. And it was horrible timing because at the end of August, that's when most people go away. All right. Any other questions? All right. So thank you for your time. And I'm going to put the link on the description box so you can track these stocks. Right now, it's 81 stocks. All right. So trade them well and be well.